All right, off to the eNCA Money Desk now with Rofhiwa Madzena. All right, Rofhiwa, thank you so much for joining. I suppose this is a busy week, and the big one on people's minds is whether we'll see another interest rate cut this week.
Yes, Clement, so analysts are largely saying that there's still room for another rate cut. Economic growth is in the doldrums, and we've seen the last figures that came out last week of GDP really not doing too well. And of course, inflation remaining well below the upper end of the 3 to 6 target range that is set by the Reserve Bank. What's important to note here is that the Reserve Bank has said that they will give as much support as they can in the short to medium term to grow the economy, and that of course does include cutting interest rates. So there's a bit of a split in terms of whether they will hold or if they will cut. And then just a quick reminder, the prime lending rate is sitting at 6.75% and the repo rate is sitting at 3.25, a stark contrast from what we saw in 2017 where it was at around 10%.
And what this week we'll also see is a host of company results. I know BIDVEST is one of them, and that's the group that is looking at retrenching staff.
Unfortunately, that is the case for many companies in the country at the moment, Clement. So BIDVEST Group saying that even though they reported resilient full-year earnings this year, they are going to have to be restructuring their business in the form of retrenchments. So we are seeing that the business as well as the banking business will be seeing around 400 people losing their jobs there. And then the other divisions within the business, those negotiations are still happening. So they're just saying, and that's because of the headline earnings that we saw and of course the uncertainty around the impact of COVID-19. And then let's quickly tell you about Woolworths. So this one is a bit of a painful one. They're seeing a lot of pressure coming in from the David Jones, which is the Australian business, as well as the clothing business locally. What has buoyed Woolworths over the last few years is its food business, which was allowed to operate during the lockdown. So a lot of analysts now looking at that Australian business and wondering if perhaps Woolworths should not be getting rid of their business. So their earnings set to be lower for the half year that they'll be reporting this week.
And then there's also much anticipation about a possible ease to lockdown level 1. And I suppose the big issue here is, you know, there's a part of the economy that is still suffocated by the restrictions.
Yes, Clement, the tourism sector. So the industry is pleading for borders to be opened, not just soon, as the government has indicated, but right now, Clement. Now, before domestic travel was allowed, the industry was losing around 740 million rand a day. But sector leaders are saying that they need definite rates from government so that international tourists can start making bookings. They say the industry is well equipped to provide preventative measures to deal with the possible transmission of COVID-19. And this is going to be very critical if we do hear or have that family meeting, Clement, because the holiday season is around the corner.
All right. How have the markets started off this week?
Very positive start to the JSE this week, Clement. It's mostly firmer. That was this morning, and that was in line with Asian markets. Now, there are some optimistic views because of the COVID-19 vaccine boosting sentiment, and that's also on the global front. Locally, the bourse's movements will be influenced by the rate decision that's coming in later this week. And it's also, we're seeing a firmer rand because of a weaker dollar and all eyes on monetary policy decisions. And like I say, it's not just South Africa. The US Federal Reserve as well as Britain will be defining their monetary policies this week as well.
All right. Rofhiwa Madzena, thank you so much for your time.